It might look like it's easier than most people think to make money with coins. Now let's begin. Many of you are interested in how to make money with cryptocurrencies, and that's what we'll talk about today. No matter if you like freedom or making money is your main goal, we can all agree that losing money is never fun. Everyone wants to get something out of the time and effort they put into their hobbies or interests. Surprisingly, there is an easy way to make money in the world of cryptocurrencies. This method has worked well for both cryptocurrencies and traditional financial markets. I'll show you a powerful way to make your cryptocurrency goods worth more. Dollar cost averaging, or DCA, is the approach we'll be talking about in more depth today. I also have a special surprise for you at the end of this video, a very important lesson that I won't give away right away. So pay attention and try to figure out what the lesson is. In 2013, I, along with a lot of other people, missed the chance to learn about XRP, which is a secret gem in the world of cryptocurrencies. As someone who invested in Bitcoin in 2012, I want you to think about what would have happened if you had done the same. Many of you are surely thinking, I wish I knew that back then. This talk will be about how you can take advantage of these chances now. Welcome back to the place where you can always find the latest XRP news. Before we talk about today's exciting news, I need a quick favor. Let us know if you like our post by giving us some money. If you want to be a part of our lively group, click the like button, subscribe to our channel, and turn on the notification bell. What if, starting in 2013, you decided every week to put $100 into XRP? Some people call this 100 bones. Your total investment would have been about $54,000. Are you able to guess how much that investment is worth now? A huge $1.44 million. Yes, you read that right. Really cool, huh? You're very good at working with numbers. It is amazing to think that you could spend $54,000 and see it grow into $1.44 million. But it's important to keep our excitement in check with a realistic view. The $27,000 you put into the stock could have grown to an amazing $5.3 million if you sold it in 2018. If you had invested about $27,000 at the peak of the market, on the other hand, your returns now would be, to say the least, not very big. This shows how unpredictable buying in cryptocurrencies can be. It's very important to time your exit plan, and I still find it hard to do after 12 years in the cryptocurrency business. The dollar cost averaging method has been shown to be successful, but it comes with some risks, especially if you have been spending since the market peak. Then what's the lesson here? This situation shows how important it is to avoid being too greedy. Putting money into these investments with diamond hands might not be a good idea. A lot of people get the wrong idea about diamond hands, which encourages hanging on to investments for a long time. What we're really pushing is the idea of strong hands, or the ability to ride out market downturns without losing your cool. Investors, not traders, need to know this approach because they need to know that holding for a long time isn't always a good idea. Most people probably won't use XRP as their daily currency, even though it's popular in the world of digital currencies and is used by banks and for foreign transactions. It's very important to find the best time to quit your job. From the beginning in 2013, when XRP was just $100 a month, it could have grown to $1.44 million. You need to be strategic and do a lot of research to be able to see these chances early on. That's the real challenge and lesson here. The market is still full of risk and uncertainty, which affects everyone's choice to spend, from large institutional investors to small individual investors. This misunderstanding is mostly about figuring out the risks that come with investing in stocks and cryptocurrencies. The last Federal Reserve meeting and Chairman Powell's statements, especially the surprise decision not to raise interest rates, have made this uncertainty even worse. This setting makes it clear how important it is to have information and a plan when investing in the uncertain world. Many people were expecting the Federal Reserve to keep the interest rate at its current level, but they were still waiting for Chairman Powell to talk about what he thought would happen in 2024. People were especially hopeful that interest rates would soon start to go down, which would make the current financial problems a lot easier to deal with. As we look ahead to 2024, the financial world is riskier and less clear because of what Chairman Powell said, which didn't make it clear when future rate cuts would happen. Investors and experts have had a hard time navigating the coming year because they don't know what will happen. This decision does not mean that a financial crisis is about to happen, but it is another problem in the ongoing fight against inflation, in which the Federal Reserve is the judge. Because the referee doesn't give clear signs, market players feel like they are getting punched over and over again with little help. The Federal Reserve is negotiating a tough problem as they try to figure out where they stand. This situation shows how hard it is for the Federal Reserve to find the right mix between fighting inflation and making the economy grow. It also shows how complicated the link is between decisions about monetary policy and the effects they have on the economy as a whole. Because they are being careful, the Federal Reserve is not being completely clear about what they plan to do. They are carefully looking at a wide range of economic and other factors in order to deal with the changing economic situation. As private cryptocurrency investors, this is a big problem for us. A lot of investors, from big banks to regular people like us, are hesitant to put money into the market right now because of the risk and instability. Because people who invest think that putting money into Bitcoin, Ethereum, Cardano, or any other digital asset comes with too much danger and uncertainty. A large amount of money is not spent. Because of what happened today, we are being even more careful, which raises the risk and makes it harder for us to find our way. These events make the current period of inactivity in the coin market last longer. There has been no growth or movement during this time. People in the crypto community are now paying close attention to the Federal Reserve's meeting in March and the planned having of events that could change the direction of the market. The extra confusion caused by risk and insecurity in the market today is a reminder of how wild and unpredictable the cryptocurrency market is. But as time goes on and more clear signs and progress are made that could show the crypto ecosystem's future path, these problems also present chances for growth and change. Remember that I am not licensed as a financial planner. The only goal of these movies is to be fun. I always tell my viewers to do their own study and talk to experts before making any financial decisions. Thank you very much for listening. Don't forget to click subscribe and thumbs up if you like the movie. Also, make sure you turn on the alerts so you'll be the first to know when I post something new. I'm looking forward to seeing you in the next movie. Watch out!